What recommendation or suggestion would you give to somebody approaching investment in startups these days? I mean, we were looking at the statistics recently. There is only something like 2 or 3% of high net worth individuals are actually using SEIS or other form of investment. So it sounds like there is a significant, still some potential in terms of money that are being parked elsewhere, and of course the startup. I mean, regardless of the moment and the markets, the startup world will keep growing, and it's quite an exciting way of developing innovation. So if you were to somehow give some suggestion to somebody who's approaching or considering investing in startups, what would you say?
I would say you need to think about the whole funding journey, about where you need to get to. So you might want to raise 150k of SEIS to get yourself going, then another 500k, then it might be 2 million, then you may not need any more money. But think about what size of the pie you think you can get to at the end of that journey. And I was talking to someone this morning about, dilution, whether you're diluting a company when you're raising them £10 million. Well, actually that £10 million might generate 50 million of value. So actually it's not dilutive to your overall wealth, it's dilutive to your shareholding. And I don't think, I think that's actually hard to navigate as a startup, particularly as you're dealing with discretionary capital, you're dealing with a lot of individuals, you're consistently probably fundraising for 2 years once you start out, which is exhausting. So I think be flexible on valuation. Be flexible and be ready to think about the wider and longer journey, because you're going to have to, because it's a 5, 7, 10 year journey.
And is there anything else that you look for beyond the team and the idea?
I'm looking for, in the long run, that the company can generate decent gross margins. That's important because that allows flexibility when things may not be going quite to plan. Certainly with product businesses on the consumer side. And I look for typically businesses that are at that point where they're ready to scale, but not quite ready for institutional capital. So they might have had a couple of friends and family rounds, but they just need that little boost to clear a couple of bumps along the road before they can truly scale up. That's pretty much it. I mean, ideally the type of company I look for is something which is just on the cusp of break even, where you can push them through that, and there's a clear value inflection point at that stage. They're attractive.